Question 1. Which of the following best describes a moral hazard in the context of property and casualty insurance? A risk that arises naturally, like weather events affecting property. B. A situation where the insured intentionally provides misleading information to gain a benefit. C. A characteristic that makes a loss more likely but is beyond the insured's control. D. The risk of damage due to poor maintenance of a property. Correct answer. B. A situation where the insured intentionally provides misleading information to gain a benefit. Explanation. In insurance, a moral hazard refers to behavior or attitudes that increase the likelihood of a loss occurring because the insured knows they are covered. It involves intentional or reckless actions, such as providing misleading information or taking undue risks because the insurer will bear the financial loss. Unlike a physical hazard, which includes controllable, tangible risks like poor property maintenance, option D, or natural risks, option A, moral hazard is directly linked to the insured's behavior and intent. This concept is critical in assessing risks and pricing premiums, as it helps insurers identify potential areas of misuse. Question 2. In a valid insurance contract, what is meant by the term consideration? A. The legal purpose of the contract, ensuring it aligns with public policy. B. The mutual agreement between parties on the coverage limits. C. The payment of premiums by the insured and the promise of coverage by the insurer. D. The requirement that each party must benefit equally from the contract terms. Correct answer. C. The payment of premiums by the insured and the promise of coverage by the insurer. Explanation. In insurance contracts, consideration refers to the exchange of value between parties, which is essential for a legally enforceable contract. The insured's consideration is the premium payment, while the insurer's consideration is the promise to pay for covered losses or to provide certain benefits if a loss occurs. This principle underlines the mutual obligations in a contract and is fundamental in contract law, ensuring that both parties offer something of value, thus making the contract binding. The other options either relate to other aspects of contract law, such as legal purpose, or incorrectly describe consideration equal way not aligned with contract principles. Question 3. Scenario. Mr. Larson, who owns a small business in South Dakota, has recently filed a property damage claim under his commercial property insurance policy. The insurer has requested multiple documents and statements to assess the loss. However, Mr. Larson feels overwhelmed and considers not cooperating further. What should Mr. Larson do to ensure compliance and facilitate the claim process? A. Only provide the documents he feels are relevant to the claim. B. Ignore the requests as the insurer has sufficient information from his initial claim report. C. Cooperate fully by providing all requested documents and statements. D. Wait for the insurer to complete the assessment without submitting further documents. Correct answer. C. Cooperate fully by providing all requested documents and statements. Explanation. Under insurance policy conditions, policyholders are generally required to cooperate fully with the insurer during the claims process, including providing necessary documentation and statements to assess the claim. This duty to cooperate is critical in claims handling, as the insurer must verify losses and assess potential liabilities accurately. Failing to provide requested information could lead to delays or denial of the claim. In South Dakota, as in other states, the insured's cooperation helps fulfill the utmost good faith principle, which is a cornerstone of insurance contracts and claims management. Question 4. Which of the following best defines the law of large numbers and its role in the South Dakota insurance industry? A. It allows insurers to predict individual losses with certainty. B. It suggests that the probability of loss decreases as the number of insureds increases. C. It allows insurers to predict overall loss outcomes more accurately by pooling a large number of risks. D. It implies that each policyholder's premium will decrease as the insurance pool grows. Correct answer. C. It allows insurers to predict overall loss outcomes more accurately by pooling a large number of risks. Explanation. The law of large numbers is a statistical principle that helps insurers predict loss trends across a large group rather than for individual policyholders. By insuring a large number of similar risks, insurers can estimate overall losses more accurately, which is essential for setting premiums and ensuring financial stability. This principle supports the viability of insurance pools in South Dakota as it enables insurers to manage risk by spreading potential losses among many policyholders, thereby minimizing financial volatility. Question 5. Which type of insurer is characterized by its ownership structure, where the policyholders are also owners of the company and share in the profits in the form of dividends? A. Stock insurance company. B. Reciprocal insurance exchange. C. Mutual insurance company. D. Lloyd's Association. Correct answer. C. Mutual insurance company. Explanation. A mutual insurance company is owned by its policyholders, not shareholders. Policyholders in mutual companies may receive dividends if the company generates a surplus, effectively sharing in the company's profits. This ownership structure contrasts with stock companies, which are owned by shareholders who receive dividends based on stock ownership. South Dakota law recognizes both types of insurers, but mutual companies are unique in their focus on returning profits to policyholders, reinforcing the mutual benefit concept in the insurance sector. Question 6. In South Dakota, an insurance policy that requires the insured to accept the terms exactly as they are written without negotiation is known as A. Unilateral contract, B. A contract of adhesion, C. A reciprocal contract, D. A conditional contract. Correct answer. B. A contract of adhesion. Explanation. A contract of adhesion is a standard insurance contract in which the insurer sets the terms, and the insured has little or no opportunity to negotiate them. This means the insured must either accept or decline the contract as written. South Dakota insurers issue most policies as contracts of adhesion, making the insurer responsible for any ambiguities in the contract language, as courts typically rule in favor of the insured in cases of unclear terms due to the power imbalance inherent in such contracts. Question 7. Scenario: Miss Kennedy, a resident of South Dakota, has a homeowner's policy with a replacement cost coverage endorsement for her personal property. Following a recent storm, her laptop, which she purchased 3 years ago, was damaged. Which of the following accurately describes how her claim will likely be handled? A. She will receive the actual cash value for the laptop, which accounts for depreciation. B. She will receive the replacement cost of a new laptop of similar make and model. C. She will receive the cost to the original purchase price of the laptop. D. She will receive a depreciated replacement cost that partially compensates for a new laptop. Correct answer. B. She will receive the replacement cost of a new laptop of similar make and model. Explanation. With a replacement cost endorsement, the insurer compensates the policyholder for the cost to replace the damaged item with a new item of similar type and quality, regardless of depreciation. South Dakota homeowners policies that include this endorsement allow the insured to be fully indemnified for personal property losses, thus preserving the insured's financial position as it was before the loss. Unlike actual cash value policies, which factor in depreciation, option A, replacement cost policies do not deduct for age or wear and tear, making option B the correct answer. Question 8. The principle of indemnity in South Dakota insurance means A. The insured should profit from a loss. B. The insured should be returned to the same financial position as before the loss. C. The insured is allowed to recover twice the amount of the loss if it is deemed significant. D. The insured may assign their insurance policy benefits to any beneficiary of their choice. Correct answer. B. The insured should be returned to the same financial position as before the loss. Explanation. The principle of indemnity is a fundamental concept in insurance that prevents the insured from profiting from a loss. Instead, it ensures that the insured is compensated only to the extent of the actual loss, thus restoring their financial position to what it was before the loss occurred. In South Dakota, the principle of indemnity underpins most insurance policies and prevents both the insured and the insurer from unfair gains. It ensures that coverage amounts align with actual losses, supporting fair compensation without exceeding the actual value lost. Question 9. If a South Dakota insurer practices unfair trade practices, which of the following would NOT be considered an example? A. Misrepresenting policy benefits. B. Using false advertising to promote policies. C. Offering fair discounts to low-risk customers. D. Failing to act in good faith in claims processing. Correct answer. C. Offering fair discounts to low-risk customers. Explanation. Unfair trade practices in insurance include actions such as misrepresenting policy benefits, false advertising, and failing to act in good faith during claims handling. These actions violate consumer protection standards and are regulated by South Dakota law to ensure fair treatment of policyholders. Offering discounts to low-risk customers, option C, is not considered an unfair practice. It's a common industry practice aligned with risk assessment, rewarding policyholders who represent a lower risk of claims. South Dakota's Unfair Trade Practices Act mandates ethical conduct and transparency in the insurance industry, helping to maintain consumer trust. Question 10. Under South Dakota insurance regulations, when an insurer provides coverage for both bodily injury and for property damage under a single liability policy, this combined coverage is referred to as A. Comprehensive liability coverage, B. Split limit liability coverage, C. Combined single limit, CSL, coverage, D. General aggregate limit coverage. Correct answer, C. Combined single limit, CSL, coverage. Explanation. Combined single limit, CSL, coverage provides a single total limit for both bodily injury and property damage claims under a liability policy. Unlike split-limit policies, which separate bodily injury and property damage coverage with individual limits, CSL policies use a single aggregate limit that can apply to either or both types of damages. This structure simplifies claim settlements, as the total limit can be applied across different claims without regard to specific types of damage. South Dakota insurers commonly offer CSL options, especially in commercial liability and auto policies, to provide flexible, comprehensive protection for policyholders. Question 11. In a standard homeowner's insurance policy, which of the following perils is typically not covered under the basic policy form? A. Fire, B. Theft, C. Earthquake, D. Vandalism. Correct answer, C. Earthquake. Explanation. Earthquake coverage is generally excluded from standard homeowners insurance policies and often requires a separate endorsement or policy. Basic policy forms typically cover fire, theft, and vandalism. Earthquakes are considered high-risk events that require specialized coverage due to the potential for catastrophic loss. Question 12. Which of the following is an example of an indirect loss that may be covered under a property insurance policy? A. Fire damage to the insured's home, B. Loss of rental income due to a covered event, C. Theft of jewelry from the insured's home, D. Hail damage to the insured's car. Correct answer, B. Loss of rental income due to a covered event. Explanation. An indirect loss refers to the financial impact that results from an inability to use the insured property, such as lost rental income while the property is being repaired after. A covered loss, direct losses, answers A, C, and D, involve physical damage or a loss to property. Question 13. In an insurance contract, which term refers to the insurer's right to assume the legal rights of the insured to recover losses from a third party? A. Indemnity, B. Subrogation, C. Assignment, D. Waiver. Correct answer, B. Subrogation. Explanation. Subrogation allows the insured to step into the shoes of the insured to pursue recovery from a third party responsible for the loss. This right helps insurers recoup some costs, reducing premiums. Indemnity, answer A, is the principle of making the insured whole. Assignment, answer C, transfers policy ownership, and waiver, answer D, is the voluntary relinquishment of unknown right. Question 14. Which of the following statements best describes the concept of replacement cost coverage in property insurance? A. It reimburses the insured based on the depreciated value of the property. B. It pays the insured the cost to replace the damaged property with similar items. C. It provides an agreed upon amount regardless of actual repair costs. D. It covers the original purchase price of the damaged property. Correct answer, B. It pays the insured the cost to replace the damaged property with similar items. Explanation. Replacement cost coverage reimburses the insured for the cost of replacing damaged property with new items of like kind and quality without considering depreciation. Actual cash value, answer A, would account for depreciation, and the other options, answer C and D, do not accurately describe replacement cost. Question 15. Which type of insurance policy would provide coverage if a customer slips and falls in a business's retail store? A. Product liability insurance, B. Commercial auto insurance. C. General liability insurance. D. Workers' compensation insurance. Correct answer. C. General liability insurance. Explanation. General liability insurance covers bodily injury and property damage claims arising from accidents on the insured's premises. A slip and fall incident in a retail store would be covered by this policy. Product liability, answer A, covers injuries due to products. Commercial auto, answer B, covers vehicles. And workers' compensation, answer D, covers employees. Question 16. In an insurance policy, which section specifies the duties of the insured and insurer in the event of a loss? A. Exclusions. B. Insuring agreement. C. Conditions. D. Declarations. Correct answer. C. Conditions. Explanation. The conditions section outlines the responsibilities of both the insured and insurer following a loss. It may include requirements for reporting claims, cooperating with investigations, and protecting damaged property. The exclusions section, answer A, lists perils not covered. The insuring agreement, answer B, defines coverage. And the declarations page, answer D, includes policy details like names and coverages. Question 17. An insured's auto policy has split limits of $50,000, $100,000, $25,000. What does the $100,000 represent? A. Maximum coverage for property damage per accident. B. Maximum bodily injury coverage per person. C. Maximum bodily injury coverage per accident. D. Maximum deductible for bodily injury. Correct answer. C. Maximum bodily injury coverage per accident. Explanation. In split limits, the second figure, $100,000, represents the maximum amount payable for bodily injury per accident, regardless of the number of people injured. The first figure, $50,000, is the limit per person for bodily injury, and the third, $25,000, is the property damage limit. Question 18. Which of the following best describes a binder in insurance? A. A temporary contract of insurance providing coverage until the policy is issued. B. The primary source of coverage for high-value property. C. A guarantee that the insurer will issue a policy regardless of risk. D. An endorsement that increases policy limits. Correct answer. A. A temporary contract of insurance providing coverage until the policy is issued. Explanation. A binder is a temporary agreement that provides immediate insurance coverage until the formal policy can be issued. It acts as a short-term proof of insurance, covering the insured against potential losses. Answers B, C, and D do not accurately describe the purpose or function of a binder. Question 19. In property insurance, which of the following terms refers to the concept that insurance should restore the insured to the same financial position as before the loss? A. Waiver. B. Indemnity. C. Reimbursement. D. Subrogation. Correct answer. B. Indemnity. Explanation. The principle of indemnity ensures that insurance reimburses the insured only to the extent of their financial loss, preventing profit from a claim. This principle is foundational in property and casualty insurance to maintain fairness. Reimbursement, answer C, involves specific payments. Waiver, answer A, is the relinquishment of rights, and subrogation, answer D, allows the insurer to seek recovery from responsible third parties. Question 20. If an insured's home sustains damage from a covered peril, which of the following clauses might require the insured to repair or replace the property before receiving full reimbursement? A. Pro rata clause. B. Coinsurance clause. C. Deductible clause. D. Restoration clause. Correct answer. B. Coinsurance clause. Explanation. The coinsurance clause in a property policy often requires the insured to carry a certain percentage of the property's value as coverage. If this condition is not met, the insured may only receive a partial payout. To receive full reimbursement, the insured must generally comply with the coinsurance requirements, which may involve repairing or replacing damaged property. The other clauses listed do not relate to repair or replacement requirements in this way. Question 21. An insured in South Dakota has a homeowner's policy with an endorsement for replacement cost coverage. If their 15-year-old roof is destroyed by a covered peril, what type of settlement can they expect under this endorsement? A. Replacement cost of the roof at its current market price. B. Actual cash value based on the roof's age and depreciation. C. Replacement cost minus any deductible without accounting for depreciation. D. A prorated amount based on the original purchase price of the roof. Correct answer. C. Replacement cost minus any deductible without accounting for depreciation. Explanation. With replacement cost coverage, the insurer pays the cost to replace damaged property with new materials of like kind and quality without deduction for depreciation, but the deductible applies. In South Dakota, replacement cost endorsements are commonly added to homeowners' policies, ensuring that the insured receives enough to replace the roof as if it were new, even though the roof has depreciated. This differs from actual cash value policies, which account for depreciation. Question 22. In South Dakota, under a standard personal auto policy, which coverage would apply if an uninsured driver collides with the insured's vehicle, causing significant bodily injury to the insured? A. Collision coverage. B. Bodily injury liability coverage. C. Uninsured motorist coverage. D. Comprehensive coverage. Correct answer. C. Uninsured motorist coverage. Explanation. Uninsured motorist coverage is designed to protect insured drivers if they are injured by a driver who lacks insurance. In South Dakota, coverage is required to protect against bodily injury caused by uninsured drivers. This coverage would pay for injuries to the insured and passengers in such cases, while other options like collision coverage address vehicle damage only, and liability coverage pays for injuries or damages the insured may cause to others. Question 23. Which of the following best describes how a scheduled personal property endorsement works under a South Dakota homeowner's policy? A. It provides coverage only for items damaged due to fire or theft. B. It offers broader coverage and removes coverage limits on certain valuable items. C. It reduces the deductible for specific items listed in the policy. D. It increases coverage for all personal property without the need for itemization. Correct answer. B. It offers broader coverage and removes coverage limits on certain valuable items. Explanation. A scheduled personal property endorsement allows policyholders to insure high-value items such as jewelry, artwork, or electronics for their appraised value, often with fewer exclusions than general personal property coverage. In South Dakota, this endorsement is beneficial for insureds with valuable personal property as it bypasses the general sublimits applied to categories like jewelry under standard coverage. The endorsement also typically removes deductibles for the items listed. Question 24. Under South Dakota insurance law, which of the following is considered an unfair claims practice? A. Requesting an independent adjuster review of a claim. B. Delaying the investigation of a claim to require further documentation. C. Promptly denying a claim with clear evidence of fraud. D. Failing to provide a reasonable explanation for claim denial. Correct answer. D. Failing to provide a reasonable explanation for claim denial. Explanation. Failing to give a reasonable explanation for the denial of a claim violates South Dakota's unfair claims settlement practices. Insurers are required to communicate clearly with claimants, providing specific reasons if they deny a claim. Actions like delaying without reason or withholding key information are considered bad faith practices and are regulated by the South Dakota Division of Insurance. The other options can be appropriate depending on context and evidence. Question 25. John, a South Dakota resident, owns a commercial building insured under a commercial property policy. If he wants coverage for losses incurred when his business cannot operate due to covered loss, which additional coverage should he consider? A. Extra expense coverage. B. Business income coverage. C. Blanket coverage. D. Ordinance or law coverage. Correct answer. B. Business income coverage. Explanation. Business income coverage, also known as business interruption insurance, compensates for lost income when operations are suspended due to covered peril. Insuring businesses can cover ongoing expenses and recover financially. In South Dakota, many business owners add this coverage to protect against income loss, which is especially critical for service-based industries. Extra expense coverage would cover expenses that help resume operations, but not income replacement itself. Question 26. Which of the following best describes the function of the coinsurance clause of ECA South Dakota property insurance policy? A. It allows the insured to increase or decrease coverage as needed. B. It incentivizes policyholders to insure property to its full value. C. It reduces the policyholder's deductible when higher coverage limits are purchased. D. It allows multiple policies to provide coverage on the same property. Correct answer. B. It incentivizes policyholders to insure property to its full value. Explanation. The coinsurance clause requires insureds to carry a specified percentage, usually 80%, of the property's value to avoid penalties at claim time. If a South Dakota policyholder underinsures their property, they may face reduced claim payouts. This clause ensures that policyholders maintain adequate insurance, which stabilizes premiums across policyholders and reduces insurer risk. Question 27. Under South Dakota's minimum requirements for auto insurance, which coverage is mandatory? A. Uninsured motorist coverage. B. Comprehensive coverage. C. Medical payments coverage. D. Collision coverage. Correct answer. A. Uninsured motorist coverage. Explanation. South Dakota mandates uninsured motorist coverage as part of its minimum auto insurance requirements. This coverage protects insureds in the event they are injured by a driver who does not carry insurance. Collision and comprehensive coverages are optional and cover damages to the insured's vehicle, while medical payments coverage is also optional. Question 28. A South Dakota homeowner wants coverage for flood damage to their property. What is the most appropriate way for them to obtain this coverage? They add a flood endorsement to their homeowner's policy. B. Purchase a separate flood insurance policy. C. Increase the personal property coverage limit. D. Purchase a higher value homeowner's policy. Correct answer. B. Purchase a separate flood insurance policy. Explanation. Standard homeowners insurance policies do not cover flood damage, so South Dakota homeowners seeking flood protection must purchase a separate flood insurance policy, often through the National Flood Insurance Program, NFIP, or private insurers. Endorsements are typically unavailable for this type of coverage in homeowners policies. Flood policies protect against water damage due to natural flooding events, which standard policies exclude. Question 29. In South Dakota, which of the following is typically considered an example of pure risk in insurance? A. Gambling on sports outcomes. B. Investing in the stock market. C. Driving a vehicle. D. Starting a new business. Correct answer. C. Driving a vehicle. Explanation. Pure risk involves situations that can result only in loss or no change, not in a gain. Driving is a pure risk because it entails potential accidents and losses with no possibility of financial gain. Pure risks are generally insurable, as they do not involve speculative, gain-based outcomes, options like gambling, investing, or starting a business, or speculative risks, as they carry both potential losses and gains, making them generally uninsurable under traditional policies. Question 30. Which principle in South Dakota insurance contracts prevents an insured from profiting from a claim? A. Principle of adhesion. B. Principle of indemnity. C. Law of large numbers. D. Subrogation. Correct answer. B. Principle of indemnity. Explanation. The principle of indemnity ensures that an insurance policy restores the insured to their original financial position after a loss rather than allowing them to profit. This is a foundational insurance concept applied in South Dakota, preventing overinsurance and encouraging fair claims practices. The other principles play different roles. Adhesion deals with contract fairness, the law of large numbers with risk pooling, and subrogation allows insurers to pursue third parties responsible for losses. Question 31. Which insurance principle states that an insured should not profit from an insurance claim but should be restored to their original financial position? A. Subrogation. B. Indemnity. C. Utmost good faith. D. Contribution. Correct answer. B. Indemnity. Explanation. The principle of indemnity ensures that an insured is compensated for their loss but does not profit from the insurance claim. It aims to restore the insured to their financial state before the loss. Subrogation. A. Allows insurers to take legal action on behalf of the insured. Utmost good faith. C. Refers to honesty in disclosing relevant information. And contribution. D. Involves multiple policies sharing the loss. Question 32. Which of the following insurance policies would provide coverage for a company if its executive officers are sued for their decisions and actions while managing the company? A. General liability insurance. B. Errors and omissions. EO. Insurance. C. Directors and officers. DO. Insurance. D. Employment practices liability insurance. Correct answer. C. Directors and officers. DO. Insurance. Explanation. Directors and officers insurance protects the company and its executives from claims resulting from decisions and actions taken while performing their duties. General liability insurance A. Covers bodily injury and property damage, errors, and omissions. B. Applies to professional negligence and employment practices liability. D. Covers employment-related issues. Question 33. What type of policy is designed to cover high-risk items such as expensive jewelry or fine art, which may not be fully covered under standard homeowners policies? A. Umbrella policy. B. Scheduled personal property endorsement. C. HA2 policy. D. Personal liability policy. Correct answer. B. Scheduled personal property endorsement. Explanation. A scheduled personal property endorsement allows for specific high-value items to be listed and covered at their appraised value under a homeowner's policy. An umbrella policy A provides additional liability coverage. Now, HA2 policy C is a basic form of homeowners insurance, and a personal liability policy D covers liability claims but not high-value items. Question 34. Which of the following is generally not covered by a comprehensive auto insurance policy? A. Theft of the vehicle. B. Hail damage. C. Collision with another vehicle. D. Vandalism. Correct answer. C. Collision with another vehicle. Explanation. Comprehensive auto insurance covers non-collision incidents such as theft, hail damage, and vandalism. Collision coverage, which is separate, applies to accidents involving other vehicles or objects. Comprehensive A, B, D does not include collision-related damage. Question 35. What is the primary purpose of reinsurance? A. To reduce an insurer's exposure to loss. B. To provide direct coverage to policyholders. C. To eliminate the need for underwriting. D. To offer insurance to high-risk individuals. Correct answer. A. To reduce an insurer's exposure to loss. Explanation. Reinsurance is the practice where insurers transfer a portion of their risk to other insurance companies to limit the total loss they could face. It does not involve direct policyholder coverage. B. Underwriting elimination. C. Or exclusively covering high-risk individuals. D. Question 36. Which clause in an insurance policy outlines the circumstances in which the insurer can deny a claim? A. Exclusions. B. Declarations. C. Conditions. D. Endorsements. Correct answer. A. Exclusions. Explanation. The exclusions section specifies the situations and conditions under which a claim may be denied. The declarations. B. Outline basic policy information. Conditions. C. List the policyholder's responsibilities. And endorsements. D. Modify the policy's coverage. Question 37. Which of the following types of insurance is mandatory for employers to provide in most states to cover work-related injuries? A. Health insurance. B. Workers' compensation insurance. C. General liability insurance. D. Disability insurance. Correct answer. B. Workers' compensation insurance. Explanation. Workers' compensation insurance is required by law in most states and provides benefits for work-related injuries or illnesses. Health insurance A. Covers general medical expenses. General liability C. Addresses third-party injuries. And disability insurance D. Supports income replacement for non-work-related disabilities. Question 38. What is the main benefit of purchasing an umbrella insurance policy? A. It increases the deductible on existing policies. B. It provides a discount on other insurance premiums. C. It offers additional liability coverage beyond the limits of standard policies. D. It extends coverage for damages excluded from all other policies. Correct answer. C. It offers additional liability coverage beyond the limits of standard policies. Explanation. An umbrella insurance policy provides extra liability protection that exceeds the coverage limits of the policyholder's standard auto or homeowner's insurance. It does not increase deductibles, A, provide discounts, B, or cover all excluded damages, D. Question 39. Which term describes the portion of a claim that the insured must pay out of pocket before the insurance company covers the remaining amount? A, premium, B, deductible, C, copayment, D, exclusion. Correct answer, B, deductible. Explanation. A deductible is the amount the policyholder is responsible for paying before the insurer covers any claim expenses. A premium, A, is the regular payment for the policy. A copayment, C, is typically found in health insurance for services and exclusions. D, are situations not covered by the policy. Question 40. What type of insurance policy is typically purchased to protect against claims that exceed the coverage provided by underlying liability policies? A, homeowner's insurance, B, umbrella insurance, C, term life insurance, D, comprehensive auto insurance. Correct answer, B, umbrella insurance. Explanation. Umbrella insurance provides additional liability coverage that supplements existing policies such as auto or homeowners insurance when the policy limits are reached. It does not provide primary coverage like homeowners, A, life, C, or comprehensive auto insurance, D. Question 41. What is the main purpose of the coinsurance clause in a property insurance policy? A, to reduce the deductible, B, to ensure that the insured shares in the risk of loss, C, to provide additional liability coverage, D, to eliminate the need for an appraisal. Correct answer, B, to ensure that the insured shares in the risk of loss. Explanation. The coinsurance clause requires the policyholder to carry a certain percentage of the property value as coverage. If the insured does not meet this requirement, they must share a portion of the loss with the insurer. This encourages policyholders to purchase sufficient insurance coverage. Question 42. Which type of life insurance policy provides a death benefit and cash value accumulation that can grow based on the performance of a portfolio of investments? A, term life insurance, B, universal life insurance, C, variable life insurance, D, whole life insurance. Correct answer, C, variable life insurance. Explanation. Variable life insurance offers both a death benefit and an investment component, where the cash value can increase based on the performance of the chosen investments. Term life, A, provides coverage without cash value. Universal life, B, has flexible premiums and cash value, and whole life, D, offers guaranteed cash value growth. Question 43. Which type of auto insurance coverage is mandatory in most states and covers injuries to other people and damage to their property when you are at fault in an accident? A, collision coverage, B, comprehensive coverage, C, liability coverage, D, uninsured motorist coverage. Correct answer, C, liability coverage. Explanation. Liability coverage is required in most states and pays for bodily injury and property damage to others if the policyholder is at fault in an accident. Collision, A, and comprehensive, B, cover damages to the policyholder's vehicle, while uninsured motorist, D, covers accidents involving uninsured drivers. Question 44. In a health insurance policy, what is the term for the fixed amount the insured pays for each medical service or prescription? A, premium, B, deductible, C, copayment, D, coinsurance. Correct answer, C, copayment. Explanation. A copayment is a set amount the insured pays for a specific service or prescription, with the remainder covered by insurance. A premium, A, is the payment for the policy. The deductible, B, is the amount paid before insurance starts covering costs, and coinsurance, D, is the percentage split of costs after the deductible is met. Question 45. Which of the following policies provides coverage for a property owner against loss of rental income if the property becomes uninhabitable due to a covered peril? A, liability insurance, B, renter's insurance, C, loss of use coverage, D, business interruption insurance. Correct answer. C. Loss of use coverage. Explanation. Loss of use coverage compensates for lost rental income if the insured property is uninhabitable due to covered peril. Liability insurance A. Covers legal claims. Renter's insurance B. Protects tenants. And business interruption insurance D. Is for business-related income loss. Question 46. What type of insurance coverage protects a professional from claims of negligence or inadequate work? A. General liability insurance. B. Workers' compensation insurance. C. Professional liability insurance. D. Business owner's policy. Correct answer. C. Professional liability insurance. Explanation. Professional liability insurance, also known as errors and omissions insurance, covers professionals against claims of negligence or inadequate work. General liability insurance A. Covers third-party bodily injury and property damage. Workers' compensation B. Covers employee injuries. A business owner's policy D. Is a comprehensive policy for small businesses. Question 47. Which of the following statements about a deductible in an insurance policy is correct? A. It is the amount the insurer pays before the insured contributes. B. It is the maximum amount the insured will pay in a policy period. C. It is the portion of a covered loss paid by the insured before insurance coverage begins. D. It is a premium rebate offered at the end of the policy term. Correct answer. C. It is the portion of a covered loss paid by the insured before insurance coverage begins. Explanation. A deductible is the amount an insured must pay out of pocket before the insurer covers any costs for a claim. It does not involve the insurer paying first A. A maximum cap on insured payments B. Or a rebate D. Question 48. What type of homeowner's insurance coverage is specifically for additional living expenses if a home is uninhabitable due to covered peril? A. Dwelling coverage. B. Personal property coverage. C. Additional living expenses. L. Coverage. D. Liability coverage. Correct answer. C. Additional living expenses. L. Coverage. Explanation. ALE coverage pays for the additional costs of living elsewhere while the home is being repaired after damage from a covered peril. Dwelling coverage A. Repairs or rebuilds the home. Personal property coverage B. Covers belongings. And liability coverage D. Protects against legal claims. Question 49. What is the primary benefit of having a HA5 homeowner's insurance policy compared to a HA3 policy? A. It provides coverage only for named perils. B. It offers comprehensive open peril coverage for both the dwelling and personal property. C. It has a lower premium cost. D. It includes earthquake insurance as standard. Correct answer. B. It offers comprehensive open peril coverage for both the dwelling and personal property. Explanation. A HA5 policy covers all perils except those specifically excluded for both the dwelling and personal property. And HA3 policy provides open peril coverage for the dwelling but named peril coverage for personal property. HA5 does not inherently include earthquake insurance D or come with lower premiums C. Question 50. Which of the following is not typically covered under a standard homeowner's insurance policy? A. Damage from fire. B. Theft of personal belongings. C. Flood damage. D. Vandalism. Correct answer. C. Flood damage. Explanation. Flood damage is generally excluded from standard homeowners insurance policies and requires separate flood insurance. Fire damage A, theft B, and vandalism D are typically covered by most standard policies. Question 51. What does an umbrella insurance policy primarily provide? A. Coverage for personal belongings up to their replacement value. B. Additional liability coverage beyond the limits of other policies. C. Comprehensive health coverage for family members. D. Protection against uninsured motorist claims. Correct answer. B. Additional liability coverage beyond the limits of other policies. Explanation. An umbrella insurance policy provides extra liability coverage beyond the limits of the insured's existing policies, such as auto or homeowners insurance. does not cover personal belongings. A. Comprehensive health coverage, C. Or uninsured motorist claims, D. Question 52. Which of the following best describes a peril in the context of insurance? A. A condition that increases the chance of a loss. B. The actual cause of a loss. C. A cause that excludes certain types of coverage. D. The maximum coverage limit of a policy. Correct answer. B. The actual cause of a loss. Explanation. A peril is the specific risk or event that causes a loss, such as fire, theft, or a storm. A condition increasing the chance of loss, A, is a hazard, while exclusions, C, and policy limits, D, relate to policy terms. Question 53. In auto insurance, what does PIP, personal injury protection, coverage typically include? A, damage to your vehicle from a collision. B, legal defense costs in case of a lawsuit. C, medical expenses for injuries regardless of fall. D, liability for damages you cause to other vehicles. Correct answer. C, medical expenses for injuries regardless of fall. Explanation. PIP coverage helps pay for medical expenses and sometimes lost wages for the policyholder and passengers, regardless of who is at fault in an accident. Does not cover vehicle damage, A, legal defense, B, or third-party liability, D. Question 54. What is the term for the initial amount an insured person must pay before their insurance starts covering expenses? A, copayment. B, premium. C, deductible. D, coinsurance. Correct answer. C, deductible. Explanation. A deductible is the amount paid out of the pocket by the insured before the insurance company starts to cover costs. Copayment, A, is a fixed amount for a service. A premium, B, is the payment for the policy. And coinsurance, D, is a cost-sharing arrangement after the deductible. Question 55. What is the main function of an insurance premium? A, it acts as a deductible in a policy. B, it represents the total amount of coverage available. C, it is the periodic payment made by the policyholder to maintain insurance coverage. D, it is the maximum benefit an insurer will pay for a claim. Correct answer. C, it is the periodic payment made by the policyholder to maintain insurance coverage. Explanation. An insurance premium is the payment made by the policyholder to keep their insurance policy active. It is not the deductible, A, the total coverage amount, B, or the maximum payout, D. Question 56. Which type of life insurance provides coverage for a specific term and does not accumulate cash value? A, whole life insurance. B, universal life insurance. C, term life insurance. D, variable life insurance. Correct answer. C, term life insurance. Explanation. Term life insurance provides coverage for a specific period and it does not accumulate cash value. Whole life, A, universal life, B, and variable life, D, policies include a cash value component. Question 57. What type of insurance policy would typically cover the costs associated with a data breach? A, commercial property insurance. B, general liability insurance. C, cyber liability insurance. D, business interruption insurance. Correct answer. C, cyber liability insurance. Explanation. Cyber liability insurance helps cover the costs associated with data breaches, including legal fees, notification expenses, and credit monitoring. Commercial property insurance, A, covers physical assets. General liability, B, covers bodily injury and property damage. And business interruption insurance, D, covers lost revenue due to operational disruptions. Question 58. Which clause in an insurance policy specifies the conditions under which the policyholder can cancel the policy? A, exclusions clause. B, cancellation clause. C, indemnity clause. D, coinsurance clause. Correct answer. B, cancellation clause. Explanation. A cancellation clause outlines the terms and conditions under which the policyholder or the insurer can terminate the policy. Exclusions. A, lists what is not covered. The indemnity clause, C, relates to compensation. And the coinsurance clause, D. Requires the insured to bear a portion of the risk. Question 59. What is the primary purpose of liability coverage in an auto insurance policy? A. To cover the insured's medical expenses. B. To cover damages to the insured's vehicle. C. To protect the insured against legal claims from third parties. D. To replace the insured's vehicle if stolen. Correct answer. C. To protect the insured against legal claims from third parties. Explanation. Liability coverage pays for damages or injuries to others when the insured is at fault in an accident. It does not cover the insured's medical expenses, A. Their vehicle damage, B. Or theft of the vehicle, D. Question 60. Which type of homeowner's insurance policy provides the broadest coverage, including open peril coverage for both the dwelling and personal property? A. HA1, B. HA3, C. HA5, D. HA8. Correct answer. C. HA5. Explanation. A HA5 policy provides the broadest coverage, with open peril protection for both the dwelling and personal property. HA1A is basic coverage. HA3B is a more standard policy with open peril coverage for the dwelling and named peril for personal property. And HA8D is for older homes with limited coverage. Question 61. Which of the following types of insurance would cover damages to a vehicle caused by hail? A. Liability insurance. B. Collision insurance. C. Comprehensive insurance. D. Uninsured motorist insurance. Correct answer. C. Comprehensive insurance. Explanation. Comprehensive insurance provides coverage for non-collision related damage to a vehicle, including weather-related incidents like hail, as well as theft, vandalism, and fire. Question 62. In a standard homeowner's insurance policy, coverage C typically refers to which type of coverage? A. Personal liability. B. Personal property. C. Dwelling. D. Loss of use. Correct answer. B. Personal property. Explanation. Coverage C. ECA standard homeowner's insurance policy covers personal property, which includes the insured's belongings within and sometimes outside the home, such as furniture, clothing, and electronics. Question 63. Under a standard auto insurance policy, what does uninsured motorist coverage protect against? A. Damage caused by an at-fault driver without insurance. B. Vehicle damage caused by natural disasters. C. Liability claims made against the insured. D. Injury to passengers in the insured's vehicle. Correct answer. A. Damage caused by an at-fault driver without insurance. Explanation. Uninsured motorist coverage protects the insured if they are injured or their property is damaged in an accident caused by an at-fault driver who lacks insurance. Question 64. Which of the following would typically be excluded under a standard homeowner's insurance policy? A. Fire damage to the home. B. Theft of personal property. C. Water damage from a flood. D. Damage from a fallen tree. Correct answer. C. Water damage from a flood. Explanation. Flood damage is usually excluded from standard homeowners policies and requires separate flood insurance, which can be purchased through programs like the National Flood Insurance Program and FIT. Question 65. In property and casualty insurance, the term subrogation refers to A. An insurer's right to recover costs from a third party responsible for a loss. B. The process of determining the value of an insured item. C. Coverage for additional living expenses. D. A discount for bundling multiple policies. Correct answer. A. An insurer's right to recover costs from a third party responsible for a loss. Explanation. Subrogation allows the insurer to seek reimbursement from a third party that is at fault after the insurer has paid a claim to the policyholder. Question 66. Which of the following best describes the purpose of liability insurance? A. To pay for damages to the insured's own property. B. To provide coverage for injuries or damages caused to third parties. C. To cover medical expenses for the insured's family. D. To replace lost income due to illness. Correct answer. B. To provide coverage for injuries or damages caused to third parties. Explanation. Liability insurance covers legal costs and damages if the insured is held responsible for injuring others or damaging their property, rather than covering personal property or medical expenses for the insured's family. Question 67. Which of the following is an example of a moral hazard in property insurance? A. An insured property is located in a high-crime area. B. A homeowner fails to lock their doors regularly. C. The policyholder intentionally damages their own property. D. A property is at high risk due to its location near a forest. Correct answer. C. The policyholder intentionally damages their own property. Explanation. A moral hazard involves the policyholder's intentional actions or behavior that increases the likelihood of a claim, such as intentionally damaging their own property to collect insurance proceeds. Question 68. What is the main purpose of coinsurance in a property insurance policy? A. To share the risk with another insurance provider. B. To encourage policyholders to insure property to a specific value. C. To allow multiple claims within a policy term. D. To reduce premium costs for policyholders. Correct answer. B. To encourage policyholders to insure property to specific value. Explanation. Coinsurance requires the policyholder to insure their property for a minimum percentage of its value, typically 80%, to receive full coverage on partial losses. Failing to meet this requirement may result in reduced claim payouts. Question 69. Which type of insurance policy would most likely cover injuries sustained by a customer at a business? A. Workers' compensation insurance. B. Product liability insurance. C. Commercial general liability insurance. D. Property insurance. Correct answer. C. Commercial general liability insurance. Explanation. Commercial general liability insurance protects businesses against claims for bodily injury or property damage caused to third parties on their premises, such as customers or vendors. Question 70. What does a fidelity bond cover in a business insurance context? A. Damage to business-owned vehicles. B. Employee theft or dishonesty. C. General liability claims. D. Equipment breakdown. Correct answer. B. Employee theft or dishonesty. Explanation. A fidelity bond provides coverage to businesses for losses resulting from fraudulent acts or theft committed by employees, offering financial protection against potential employee dishonesty. Question 71. What is the primary purpose of an insurance deductible? A. To increase the total coverage amount provided by the insurer. B. To reduce the premium paid by the policyholder. C. To share the cost of a claim between the insurer and the policyholder. D. To extend the length of the policy coverage period. Correct answer. C. To share the cost of a claim between the insurer and the policyholder. Explanation. A deductible is the amount the policyholder must pay out of pocket before the insurer covers the remaining cost of a claim. It ensures that the policyholder shares in the risk, helping to deter small, frequent claims. Options A, B, and D do not describe the purpose of a deductible. Question 72. Which of the following best describes actual cash value in an insurance policy? A. The cost to replace an item minus depreciation. B. The replacement cost without any deductions. C. The highest amount the insurer will pay in a claim. D. The appraised value of the property at the time of sale. Correct answer. A. The cost to replace an item minus depreciation. Explanation. Actual cash value, ACV, represents the replacement cost of an item minus depreciation, reflecting its current value rather than the original purchase or replacement cost. Options B, C, and D do not accurately define ACV. Question 73. In which situation would uninsured motorist coverage apply? A. When the insured hits an animal on the road. B. When the insured causes damage to another driver's car. C. When the insured is involved in an accident with an at-fault driver who lacks sufficient insurance. D. When the insured's car is stolen. Correct answer. C. When the insured is involved in an accident with an at-fault driver who lacks sufficient insurance. Explanation. Uninsured motorist coverage protects the policyholder if they are in an accident caused by another driver who either has no insurance or insufficient coverage. Options A, B, and D do not describe situations covered by uninsured motorist insurance. Question 74. What is the primary benefit of purchasing an umbrella insurance policy? A. It lowers the cost of the policyholder's primary insurance policies. B. It provides comprehensive coverage for all types of incidents. C. It offers additional liability coverage beyond the limits of the underlying policies. D. It insures against property damage only. Correct answer. C. It offers additional liability coverage beyond the limits of the underlying policies. Explanation. Umbrella insurance extends the liability coverage limits of home, auto, and other personal insurance policies, providing extra protection against large claims or lawsuits. Options A, B, and D do not correctly explain the purpose of umbrella insurance. Question 75. What does a policy's declarations page typically include? A. A list of excluded perils. B. Information on how to file a claim. C. The names of the insured, policy limits, and premium amount. D. A detailed description of how claims are processed. Correct answer. C. The names of the insured, policy limits, and premium amount. Explanation. The declarations page is an overview of key policy details, including the names of the insured, coverage limits, premium amount, and effective policy dates. Options A, B, and D cover other sections or documents of the policy, not the declarations page. Question 76. Which of the following is an OTA factor used by insurers to determine auto insurance premiums? A. The policyholder's driving history. B. The policyholder's age and gender. C. The color of the policyholder's car. D. The policyholder's location and type of vehicle. Correct answer. C. The color of the policyholder's car. Explanation. Insurers consider factors like driving history, age, gender, location, and the type of vehicle when determining auto insurance premiums. However, the color of a car is not typically used as a factor in premium calculations. Options A, B, and D are valid underwriting considerations. Question 77. What type of insurance policy would cover an injury to a guest at the policyholder's home? A. Collision insurance. B. Liability coverage under a homeowner's insurance policy. C. Comprehensive auto insurance. D. Personal property coverage. Correct answer. B. Liability coverage under a homeowner's insurance policy. Explanation. Liability coverage in a homeowner's insurance policy covers injuries to guests or visitors on the insured's property. This protection ensures that the policyholder can cover medical expenses or legal fees associated with such incidents. Options A, C, and D are unrelated to this type of coverage. Question 78. What does bodily injury liability insurance cover in an auto policy? A. Damages to the insured's vehicle. B. Medical expenses and lost wages for others injured by the insured. C. Comprehensive coverage for damages unrelated to accidents. D. The repair of pothole damage to the insured's car. Correct answer. B. Medical expenses and lost wages for others injured by the insured. Explanation. Bodily injury liability covers the medical expenses and lost wages of third parties injured in an accident where the insured is at fault. Helps protect the insured from financial liability related to these damages. Options A, C, and D do not describe bodily injury liability coverage. Question 79. Why might someone consider purchasing a rider for their homeowner's insurance policy? A. To avoid having a deductible on claims. B. To gain additional coverage for items not fully covered by the base policy. C. To reduce the overall premium of the policy. D. To ensure their property taxes are covered. Correct answer. B. To gain additional coverage for items not fully covered by the base policy. Explanation. A rider or endorsement provides extra coverage for valuable items or specific situations that may not be adequately covered under the standard policy terms. Options A, C, and D do not correctly describe the purpose of an insurance rider. Question 80. What is the difference between open perils and named perils policies? A. Open perils policies cover only specific losses, while named perils cover all losses. B. named perils policies cover only specified events, while open perils cover all events not specifically excluded. C. Open perils policies require higher deductibles than named perils. D. Named perils policies are only applicable to life insurance. Correct answer. B. Named perils policies cover only specified events, while open perils cover all events not specifically excluded. Explanation. A named perils policy only covers losses caused by events explicitly listed in the policy, while an open perils policy covers all events except those specifically excluded. Options A, C, and D do not accurately describe the differences between these types of policies. Question 81. Under South Dakota law, what is the primary purpose of the uninsured motorist coverage in an auto insurance policy? A. To cover damage caused by the policyholder to their own vehicle. B. To protect against injuries or damages caused by uninsured drivers. C. To provide liability coverage if the policyholder is at fault. D. To cover rental car expenses. Correct answer. B. To protect against injuries or damages caused by uninsured drivers. Explanation. Uninsured motorist coverage protects the insured if they are injured or suffer property damage in an accident caused by a driver who does not have insurance. This is especially relevant in South Dakota, where state law mandates minimum coverage to ensure policyholders are protected from losses in cases involving uninsured motorists. It does not cover the policyholder's own vehicle damage, which would require collision coverage, rental car expenses, or liability if the policyholder is at fault. Question 82. In South Dakota, what is a coinsurance clause in property insurance primarily intended to encourage? A. Full replacement value coverage on a property. B. Higher premiums for higher-risk properties. C. Sharing of costs for low-damage claims. D. Purchase of adequate insurance to value. Correct answer. D. Purchase of adequate insurance to value. Explanation. The coinsurance clause requires policyholders to insure their property for a specified percentage, usually 80%, 90%, or 100%, of its actual value to receive full compensation for partial losses. In South Dakota, this encourages property owners to purchase adequate insurance to avoid penalties during a claim. Failure to meet the coinsurance requirement may lead to reduced payouts, as the insured will be responsible for a portion of the loss. Question 83. Which of the following describes the role of South Dakota's Division of Insurance in regulating insurers? A. Issuing policies directly to the public. B. Setting premium rates for all policies. C. Monitoring compliance with state insurance laws. D. Determining coverage amounts for all policies. Correct answer. C. Monitoring compliance with state insurance laws. Explanation. South Dakota's Division of Insurance regulates the insurance industry to protect consumers, ensure fair practices, and monitor compliance with state insurance laws. They do not directly issue policies, set all premium rates, or mandate coverage amounts for individual policies, as insurers typically determine those based on risk assessments within the regulatory guidelines. Question 84. In South Dakota, if an insured has a homeowner's policy with replacement cost coverage, how is reimbursement typically handled for partial losses? Based on the actual cash value, ACV. B. The full replacement cost after deducting for depreciation. C. Replacement cost without depreciation if repairs are completed. D. Limited to the deductible amount. Correct answer. C. Replacement cost without depreciation if repairs are completed. Explanation. Under replacement cost coverage, insurers typically reimburse the cost to repair or replace damaged property without deducting depreciation, provided that the repairs are made. In South Dakota, homeowners may benefit from this type of coverage, as it ensures they can restore their property to its previous condition, mitigating financial loss from depreciation. Question 85. In South Dakota, which part of an insurance policy explicitly states what perils are covered? A. Conditions. B. Exclusions. C. Declarations. D. Insuring agreement. Correct answer. D. Insuring agreement. Explanation. The insuring agreement section of an insurance policy specifies what perils are covered, outlining the insurer's obligations under the policy. In South Dakota, like elsewhere, this section is essential for understanding the scope of coverage. The declarations detail basic policy information, conditions outline rules for coverage, and exclusions specify what is not covered. Question 86. Which South Dakota homeowners insurance endorsement would typically provide additional coverage for valuables such as jewelry or art beyond the basic policy limits? A. Inflation guard endorsement. B. Scheduled personal property endorsement. C. Replacement cost endorsement. D. Water damage endorsement. Correct answer. B. Scheduled personal property endorsement. Explanation. A scheduled personal property endorsement provides additional coverage for high-value items like jewelry, art, or collectibles, often with separate, higher limits than the base policy. In South Dakota, policyholders with valuable personal property often add this endorsement to ensure adequate protection, as basic policies may limit payouts on such items. Question 87. Under South Dakota insurance laws, which of the following is considered an unfair claims practice by an insurer? A. Denying a claim after thorough investigation. B. Taking over 30 days to settle a complex claim. C. Refusing to acknowledge a claim within a reasonable time frame. D. Requesting supporting documentation for a claim. Correct answer. C. Refusing to acknowledge a claim within a reasonable time frame. Explanation. Unfair claims practices include failing to acknowledge or respond to claims promptly, which is regulated to protect consumers. In South Dakota, insurers must handle claims fairly and efficiently. However, investigating claims and requesting documentation are standard practices to ensure legitimate processing. Question 88. Which of the following best explains the purpose of the South Dakota FAIR plan? A. To provide high-value coverage for luxury homes. B. To offer property insurance to owners who cannot obtain it in the standard market. C. To subsidize insurance premiums for all South Dakota residents. D. To cover only government-owned properties. Correct answer. B. To offer property insurance to owners who cannot obtain it in the standard market. Explanation. The South Dakota FAIR, Fair Access to Insurance Requirements, plan provides basic property insurance to individuals who may struggle to find coverage in the private market due to high risk. This ensures that all property owners have access to essential insurance, even if their properties are considered high risk by standard insurers. Question 89. In South Dakota, what is the minimum liability coverage required for auto insurance? A. 25 if 25. B. 15 C. 5125. D. 30/60/20. Correct answer. A. 25 50 25. Explanation. South Dakota law mandates minimum auto liability insurance coverage of 25 50 25. This includes $25,000 for bodily injury per person, $50,000 for bodily injury per accident, and $25,000 for property damage. These minimums ensure that drivers have basic financial protection in the event of an accident. Question 90. Under South Dakota law, which of the following is a requirement for surplus lines insurance? A. The insurance must be obtained through a licensed South Dakota agent. B. The policy must be issued by a South Dakota domestic insurer. C. The policy must match standard market rates exactly. D. The insured must prove that coverage was unavailable in the standard market. Correct answer. D. The insured must prove that coverage was unavailable in the standard market. Explanation. Surplus lines insurance allows individuals to obtain coverage for high-risk or unique properties that are not insurable in the standard market. In South Dakota, before purchasing surplus lines insurance, the insured must demonstrate that the coverage was not available through licensed insurers. Surplus lines insurers do not follow the same rate and form requirements as standard insurers, offering more flexibility for unconventional risks.